Hello everyone. Just before we go into the video, I want to just excuse my voice. I always sound like this at night time. I'm just trying to remain as quiet as possible and not wake anyone up. So hopefully, next trade recap I can do it throughout the day, so I sound a bit more clear. But hope you enjoy and take something educational out of it. Hello everyone, welcome to another NQ trade recap. Today is 22nd of January, sorry, 21st of January in the indices markets, and we're going to be reviewing today's Tuesday. No, is it Wednesday? Tuesday's price action for NQ. We're going to talk about our key levels. We're going to talk about what we're expecting for the week, market profile anticipation going into the session, and we're also going to talk about what trade did I take and what kept me in the trade. Okay. All right. Let's start off with some key levels. All right. We have a 4-hour dealing range from this low to this high. So I'm looking to use premium key levels in this premium market. We have this 4-hour fair value gap. We have this daily IFVG. We have this 4-hour order block. We have a daily proportion block down here, which has been previously respected. Right? Obviously on the daily, it's not going to be in accordance with this 4-hour dealing range, but it may be in accordance with a daily dealing range. So this could be a discount level, but not on the 4-hour, it's premium. On the daily, it might be a discount. Grab this 4-hour order block down here. We have, yeah, that's it. That's about it. So what happened during Asia? What happened during London? Let's have a look. London tap, going into Asia, tapping into a key level, expanded straight away. Actually, I did not realize this before, but 270 pips, alright. London expanded. So we're expecting New York to reach a key level. Right. But ultimately to reverse to at least the around Asia midpoint or below London lows at the minimum. Okay, so going into the session, let's mark our ADM range high, ADM range low. I'll also point out something. We have true day open price. So what's true day open? See 12 o'clock opening price. So if you're above true day open, you want to look for sells. If you're below true day open, you want to look for longs, ideally, during your micro sessions, being Asia, London, New York, right on the daily. Day trading or scalping, true day open is quite important, and it's very nice for extra confluence. Right? We have, I want to point this out. We have SMT with ES from previous week. Sorry, 2 weeks ago actually. We have SMT. So my thesis was, I want to see if that SMT pushes prices down this week, or if we will get, or if we will completely disrespect it. Then I would anticipate 6th of January weekly high right here to get purged and see how price reacts here in daily IFVG for sells. Personally, because we have a valid weekly CRT with monthly FVG at the low too. So I'm going to dive into that a little bit. Alright, we have this weekly CRT. Let's have a look at it on the weekly. Alright, so we have the weekly low, right here. First week of January. First week of January because the Monday is in January, right? And we also have a monthly FVG, as you can see. Right. we have a total sweep of the low. Second candle, total sweep, third candle, expansion expected. Here's the thing. ES, the S&P, I believe did take that high. Yeah, so we did end up taking that high, so we had SMT. Now, according to my previous videos, what have I always said? SMT can prevent CRT range highs and CRT range lows from being taken. What do we also notice? Okay, we have this weekly CRT as well, right? Okay, that's been total soup tapping the monthly key level. I'd much rather take this just because the Monday is in January and not December. As we all know, first week, manipulation. Second week, sorry, no, my bad, accumulation. Second week is manipulation. Third week is, alright, distribution. And that's about it. And then our fourth week can either be continuation or reversal. Alright, so we have accumulation. Alright, so this one, we have accumulation, we have manipulation, and we have distribution with this candle. Aiming for the highs, however, on ES we tapped into the highs, but on NQ we didn't, right? Forming SMT. Okay, so I'm not fully prone on this weekly high being hit. So what happened during the session? Well, today was a prior to 9:30 trade, so it's a bit more of a risky trade. However, with the SMT and the setup given at 9 o'clock with the clean A plus order block, I was my system told me to take it, so I did. Right? If your system tells you to take it, you take it. You don't resist. You don't resist. You don't say, oh, but it's not 9:30 yet. If that's not one of your rules. If you're resisting because it's a bit risky, but your system is telling you that it's a valid trade, you have to take it. Because if you don't, you're going to realize that there's a lot of missed opportunities. All right, so we have this 2-minute order block. All right, we actually had a very nice order block today. All right, so we have this 2-minute order block, and we ended up closing below in one candle, right? One candle, this huge distribution candle, right? So we had the 2-minute order block, we had the 15-minute CRT, right? We're sweeping 9 AM, we're sweeping the 8 AM high with the 9 AM 15-minute candle right here, right? 2-minute order block, closure below, retrace, entry, right? Stop loss at the highs, TP at the lows. All right. Okay. Now, why did I enter this trade? Oh, well, we didn't hit the 4-hour fair value gap, but we were in a 4-hour order block. See this? Mind you, we also have not closed above the mean threshold of an order block, right? Because if it closes above the mean threshold of an order block, I like to not use that order block. Why? Because the highs of that order block will likely be targeted. Because it's not showing any resistance to price whatsoever. This is resistance. This is the wicks to the damage. But bodies tell the story, right? So what kept me in the trade? Okay, well, I entered here on the retrace with this up close. What kept me in? I wanted to see a closure below this candle. Why this candle? This is a propulsion block, an order block with an order block. Why is it a propulsion block? It's a propulsion block because it's an up close candle. It's the first up close candle which was not closed above, which tested the original order block. Right? So it has to be the first candle. Okay? Then we closed below that candle. As you can see, right? We never closed above mid threshold, even without closing below the wick. Alright, but once we validated this propulsion block, I like to use the wicks. Look at that strong reaction, strong reaction. Propulsion block should always show strong reactions. If you don't, and you close above mean threshold of that propulsion block, it's likely going to fail. This is the kind of movement you need to see with these propulsion blocks, and even better, double propulsion block, which was right here. Obviously, price was so strong, we never ended up coming back to it. But it's huge dump, huge dump. So let's go on to replay. Let's execute 4 contracts. Alright, this is me live. We close below. We tap back into the order block. This is my entry. Sell. Boom, boom. Right. Boom. I'm looking for a closure below this candle. Alright, we get the closure. My stop loss, mind you, isn't changing. It's at this high. TP down here. Right. We tap back in. I want to see this get respected. If we come back to it, what I don't want to see is us closed above this mean threshold, consequent encroachment. Right, the 0.5. Alright, we're testing it. Alright, nice. Alright, we tested it again. Very clean, strong reaction. Okay, are we going to see the dump? No, we retrace back again. Okay, but this is showing a very nice retracement up to then continue down further. Mind you, this is also a fair value gap. This can be used to size in, right? Now, what we had was, I can't remember exactly where it was, but we had SMT at the lows somewhere. I wasn't too worried about that. I didn't see those SMTs getting respected because we were quite bearish on the New York session, not for the week, but on the New York session originally. But looking at this price action, how the SMT is being respected, it's showing that we could actually be bearish on the week. Okay. Boom, boom, boom. We let price run, and it eventually hits our TP. I executed about four contracts, micro contracts. I was risking very little today. Maybe 150 bucks. Not much at all, right? Not much at all. Literally peanuts. Now, I guess there's not much to talk about. We talked about Asia hitting the key level, London expanding, New York to hit a key level, all formed that SMT. So we did actually, we're in that 4-hour order block. We had that SMT with ES, right? We have the market profile anticipation that we covered. We have the true day open, selling above the true day open. What else did we cover? We covered order block, our entry, propulsion block, what kept me in the trade. The 15-minute CRT, as you can see, perfect. See that? Right, so obviously it's very late, so excuse my voice, but I'm trying to be as quiet as possible because I don't want to wake anyone up, right? But yeah, I guess I'll obviously be reviewing these trade reviews myself and seeing what I can improve on, which I am doing to try and improve on further videos. But for now, that's it. I hope you took in something about what kept me in the trade, right? Confluences throughout the trade, right? So what's keeping me confident in this trade is going to play out, right? And also keep in mind the SMT and why that might cause range highs and range lows not to be tapped. And you can watch my last video. I believe it was my last video to get a bit more on that. But for now, see you guys next video. Happy trading and good luck.